Good afternoon and welcome to the XM.com weekly market update. And joining me again from Greece this week is Peter McGuire, the CEO of XM. Hi, Pete.
Good morning, Andrew, or Kalimera, and your
There we go.
Kalispera. Good afternoon.
Exactly. All right, let's get into these numbers. Not much happening on the domestic front here, so we'll head straight to Europe where you are. So
Yeah,
the CPI numbers came out last week, came off slightly more than the market expected, not a lot, but certainly heading in one direction. And also some of the bigger economies in Europe, their inflation rate seems pretty much under control at the moment.
certainly does, and that seems to be a good point moving forward, naturally, as you highlighted. And obviously, I think you're going to see successive rate cuts from the Eurozone. Let's have a look and see what happens with the UK today as far as an election. And I wouldn't be surprised for the Bank of England also to kick the tin as far as a rate cut. So it's going to be an interesting second half, how that all plays.
Yeah, particularly with the what's happening with the, as you say, with the elections and whatnot. So we
Yeah.
also had the PPI numbers came out, which was a negative number again. And just looking at the chart, we've had at least 6 months of negativity there. So it just points to economy's not in a great shape. There seems to be some green shoots there at the moment, but they still seem to be struggling along a bit.
Well, that's right. And it'd be interesting to see map that over as far as GDP over the last quarter and into this quarter. And if we see, negative growth and how that all transpires as far as from a stagflationary standpoint, which is high inflation and negative growth.
US, plenty of activity in the US at the moment. So obviously
Absolutely.
heating up from a political perspective, which
Yep.
was that first debate last week. But look at these numbers. The PCE numbers came out late last week, a little bit lower than expected, which is playing into the rhetoric at the moment about these interest rate cuts.
Well, yeah, and I take that on board. I've also got some notes here. When you're looking at gasoline prices, Andrew, we're up 56%. Airfares up 38, electricity up 29, and groceries up 21. So you can't get away from that. Sure, it's all right to look at core, but when you're looking at the composition as far as the hurt for you and me on Main Street, and it's certainly a lot of hurt. So I'm sure that there'll be some point in time that Fed Chair Powell will have to cut rates and probably quite aggressively.
You would think so. And just overnight, the PMI numbers came out quite a low
Yeah,
number, actually. The
yeah,
market was expecting sort of over 50 there, but it came in at about 48. So, and
yeah.
the initial jobless claims as well were a little bit higher than expected. So, is that the first chink in the armour, maybe?
Well, could be. I mean, you got tomorrow, of course, non-farm payrolls, first Friday of the month. And as you've just said there, 48 from that US ISM non-manufacturing PMI. It's taken the market by a little bit of a shake-up. And if this is a continuance over the summer period, Andrew, sub 50s, then I'm sure that that will all go again into the argument for Fed Chair Powell and pretty much a baked-in 25 basis points in September. We've got to keep our mind's eye that you're 4 months away tomorrow from the election. So you really can't have successive rate cuts if you're going to do September because of from political interference standpoint.
Yeah, for sure. And obviously, it's had the effect on the dollar index as well. It's come off a bit, which is not surprising.
Yeah, well, that's right. It was really bounced high to the upside. We were through that 106 handle, and I thought, well, there's movement there to the upside. Everyone seems to be cutting, and this seems like an onward trajectory. Plenty of traders were long, but it just shows the fragility or the volatility across the currency sector. You can't take your mind's eye from the yen situation. Still at no intervention, nearly 162. So there could be a little bit of respite there as far as the US dollar being sucked back. But I still think that over the summer period, I wouldn't be surprised for it to trend a little bit higher again, bounce from this sort of number.
Yeah, and speaking of interest rates as well, here's all the major investment banks and their estimate of how many interest rate cuts there will be for the rest of the year. Now, it's a real mixed bag. Obviously, the bulk of them are saying only 25 points, which is probably a fair bet, but
Yeah.
you've certainly got quite a range there.
Well, exactly. I mean, I look at Citi at 75, you got to look at Goldman's at 50, and then you look at Mizuho and Jeffries at 0. everyone, and SocGen, everyone's has, as you said, an opinion. And this is the fabric I think traders have got to be mindful of, Andrew. You know, they ask for an opinion. This really summarizes it up so magnificently that across there, you've got 5 different views from 0 all the way to 100 basis points. And you've got some of the best analysts and biggest brains in the financial markets world, and they all have a different consensus.
Mm. I know
That's
it's
great. I mean, that's fantastic. That just shows you can be long and I can be short. You know, we've all got and we've got an opinion why, and we've got something to back it up with that opinion. I suppose that's the beauty of trading.
yeah, like there's 21 organisations there, so yeah, it's certainly a big range.
Oh
And
yeah.
just finally, earnings season is about to start again, which will be interesting to see what some of these big tech companies come out with. But first 6 months of the year, year to date, some big numbers again, particularly the S&P and the Nasdaq. It's all
Yeah.
one-way traffic.
Well, absolutely outstanding. I mean, S&P through 5,500, it really crunched higher, and then you've got Nasdaq through 18. You got the Dow sitting close to that 39.5 handle. I think it'll be back through 40. So this fear of missing out rally, Andrew, is continuing, as you said. As earnings season starts next Friday, the 12th of July, and I'm really looking for some quite positive numbers from the aspect as far as the Mag 7 and a number of other sectors. So, yeah, you can't not be in this market as far as equities, US equities. Now, I'm not saying that may not be the case in September or October, but certainly now, Andrew, it's yeah, hold on and hang on.
Yeah, and I think from a fixed income perspective, you're not getting much of a return when you got the bonds around that sort of 5% mark, and you take off inflation, and it's a pretty lean number.
Well, exactly. And then you look at something like this, 22% up on the Nasdaq, and you know it's hard not to be involved in it in some capacity from a pension standpoint, or just yeah, just straight out trading opportunity. You
Yeah, for
believe, you buy
sure.
into the story. It's hard not to
Mm.
buy into the story.
It's hard not to. That's right, and particularly with some of these companies, they're making a lot of money. So it's not just an idea. It's not like going back to the dot-com bubble back in the year 2000, where you had a ton of IPOs and they were just ideas. There was nothing really behind it. Yet these big tech companies have got products and they make a lot of money.
Yeah, they spit out cash. So I'm looking, as you said, the 12th of July's blast off for earnings, and yeah, strap yourself in. There could be some really sexy numbers.
Yeah, for sure. All right, we'll keep an eye on that, and we'll let you get back to your other meetings, Pete, and we'll chat again next week.
Yeah, I'll be joining you probably from Singapore. So yeah, got a big weekend, Andrew, and we'll be into Dubai on Sunday. So yeah, plenty of action. The markets are hot, and yeah, let's enjoy the whole movement.
Exactly. All right, we'll chat next week. Thanks for joining us again, Pete.
Thank you, Andrew.
And that's the XM.com weekly market update.